Hi, I'm Christine Giordano, news editor for Markets Group. I'm here with Robin Diamonte. She's the Chief Investment Officer of RTX, used to be known as Raytheon. She is working on a national scale on diversity, equity, and inclusion initiatives. Can you tell us a little bit more about that?
Yes, thank you. So I'm working on an initiative called the Collaboration for Equitable Savings. It's actually CFERS for short, and the website is CFERS.org. And what it is a research initiative to look to see if underrepresented population is um, is saving for retirement in a similar way. And so at RTX, we have what I believe is a state of the art savings plan, 401k savings plan, and it was one of the best in the nation. So when I was approached to look at our specific data, I didn't think that we would find some disparities among different ethnic groups when it came to savings.
What did you
Because
find?
well, it was interesting. What we found is even when you normalize for salary, age, and tenure, there's significant differences in the average balance of different races and groups. So, for example, what we are finding is something that's very similar to what we're finding nationwide is that blacks and Hispanics save less for retirement, even when they make the same amount of money as sort of white and Asian population. Black females specifically will take out 3 times more, or their probability of them taking a loan from their savings plan is 3 times more their white counterparts. And it's about 2.5 times for Hispanic folks.
Wow.
And when you dig into the details, you find that there's a whole host of issues. And what we're trying to understand is how can we address those issues, whether it has to do with communication, education, or even benefit design, to try to help different cultures and nationalities save at similar rates.
What are some of the findings as to why?
Well, what we're finding is in some of the underrepresented groups, many times they're one of the first in their families to attend college and to get a professional job, making an executive type salary or a good salary. And in these cultures, they're commonly known to want to help out their family members. So they have a culture of helping out, whether it's their elderly or their family members. So at their prime of their savings rate, around 50, 55 years old, they will actually take out loans or actually take money completely out of their savings plan to help with family matters. Other things that we're finding is in that certain nationalities, there's a trust issue for institutions. There's a lack of trust, which is understandable, and therefore they will not put their money in a savings plan that is tied to a company or institution. They'd rather go to a local bank that they feel comfortable with, or quite frankly, just save it at home. So what we're trying to do is to help participants understand that when they do put money into a savings plan, that it is in a separate account that's dedicated only for them, and that companies and other institutions can't touch that money.
So, how can other people help your initiative?
Well, the more data that we can get and the more types of data. So, for example, in my plan, we don't have data that shows whether somebody is single or married or how many children they have. But the more data that we can get in general, then we can start to narrow down by sector, by industry, by geography, and really help to focus in different areas and concentrate on helping those folks learn more about how to save comfortably for retirement.
So, if I am a plan sponsor, what do I do? What are my next steps?
Well, you can go on the website, which is cfers.org. And there's plenty of information. It has a sample report. And the great thing about this organization is it's completely confidential. So your information doesn't get out into the public. But what it does is it helps build the database. And what the organization will do is they will give you a specific report that analyzes your data compared to the benchmark or to everyone else's, so that you can work specifically on issues that are related to your employee population.
What are you doing, having analyzed your own data?
Yeah, so one of the things that we found is because there is a significant amount of loans taken out, and hardship withdrawals, one of the things that we're trying to do is, and we're definitely doing this year, is we're putting in an emergency savings plan vehicle, so that employees, when they're going through their annual enrollment, can automatically elect through payroll to go into a fund that's dedicated for emergency savings, so that if something does happen and they're having to live paycheck by paycheck, and something happens with the car breaking down, or there's an extra medical emergency, that they can tap into that emergency savings first instead of into their long-term retirement. Other things that we're doing is we're going into different employee resource groups, and we're talking to these various populations about some of the findings and trying to educate around financial wellness, about paying down debt, about the profitability of, or the interest of compound interest, and how that works over time, and how when you stop contributing, what that does and what kind of an impact it has to future savings.
Fantastic. Okay.
Thank
Very
you.
inspiring.
Thank you.